Hi, I'm Brian Maguire and you're watching East Coast Mortgage TV. Today in part 2 of this video series, we're going to dive deep into the details of the different loan types and how they can satisfy your goals. There are many loan types and we're going to pull back the curtain and explain many of them today. Loans fall into two broad types. Fixed rate loans are an excellent way to lock into a low interest rate for the life of your loan. They have terms of 30, 20, 15, or 10 years, and the shorter the term, the lower the interest rate will be. Adjustable rate mortgages, or ARMs, are flexible loans with lower initial rates and payments. There is typically a 30-year term which has a fixed rate for a specific period of time and then goes adjustable for the remaining term. They can have a fixed rate period of 1, 3, 5, 7, and 10 years. The shorter the fixed period, the lower the rate will be. Specific loan types that fall into these two categories satisfy different borrower goals and have different loan parameters. The 30-year fixed rate mortgage has an interest rate and monthly payment that remains the same for 30 years and may be good if you plan to live in the property for over 10 years. The 15-year fixed rate mortgage has an interest rate and monthly payment that remain the same for 15 years. May be good if you plan to live in the property over 10 years and want to pay off the property faster. This loan has a lower interest rate than a 30-year loan. The 10-1 ARM loan has a fixed interest rate and payment for the first 10 years. And starting with the 11th year, the interest rate is adjusted every year. This type may be good if you plan to live in the property for 10 to 12 years, like initial stability, and can accept interest rate change later. The 7-1 ARM loan has an interest rate and payment fixed for the first 7 years. Starting the 8th year, the interest rate is adjusted every year. If you plan to live in the property 7 to 8 years, like initial stability, and can accept change later, then this may be good for you. The 5-5 and the 5-1 ARM loans have interest rates and payments that stay the same for 5 years, and then in the 6 years either change once every 5 years for the 5-5 ARM or every year for the 5-1 ARM. You may like this program if you plan to live in the property for 5 to 6 years, like initial stability, and can accept changes later. The 3-3 and 3-1 ARM loans have interest rates and payments fixed for the first 3 years. And starting the 4th year, the interest rate is adjusted either every 3 years for the 3-3 ARM or every year for the 3-1 ARM. This may be the loan for you if you plan to live in the property 3 years or less, like initial payment stability, and can accept changes later. There are adjustable rate loans that have interest rates and payments that adjust every year and have potentially high payments, but if you want to take advantage of the lowest possible rates, are willing to accept yearly payment changes, or cannot qualify at higher rates, then this may be the loan for you. Now you know that there are many different types of loans and hopefully have a better understanding of what is available. Thanks for joining me, and we look forward to the opportunity to help your family determine which loan type is right to achieve your specific goals.